So we're going to continue our search for high probability directional candidates, but today I want to talk about stock volume. Stock volume. What is it? Well, let's talk about this first. Institutions control over 75% of the markets. All right, what does that mean? Well, that means that the big money is in charge. You know, where the markets will go, where institutions take them. They got all the money. If they like a stock, they'll start buying it with their big amounts of money, and that'll drive the stock up. So wouldn't it be nice if we could know their intentions? What are your intentions? Can we see their enthusiasm? Can we see, I'm doing Captain Kirk. I got my fist going like, can we, there's something on the way. Can we see what they're up to? And the answer is yes. Here's a really valuable distinction. I think I made this up. I haven't heard anybody say it. I've been saying this for 20 years. Volume equals institutional conviction. So we can uncover their conviction similar to an elephant jumping into a bathtub. They can't hide. If they're not buying, you know, millions of shares of stock, that shows up as volume. And then we can basically look over their shoulders and see their hand. You know what I mean? Here's some examples. These are recent. This is on Tal Education Group. And look at this volume down here. Volume speaks volume. Volume is institutional conviction. Kersplash, the institutions jump into the market buying these shares of the stock at with great enthusiasm, with great conviction, and couple it with that the stock has just set a 52-week high, and you have a very solid bullish directional opportunity. So that's today. You can write that one down. We'll look around for some trades here in a minute, and I'll show you exactly how to do these scans also in just a minute. And it doesn't stop there. This is another one from today. This is on Mankind. Keep an eye, look at this volume, this big volume spike here. Kersplash. The elephant jumps into the bathtub. We can see you. We can see what you're doing. And you've also taken Mankind to a 52-week high. Where's it going to go from here? Well, it could go up, down, or sideways. But with the fact that institutions just dumped there's 18 million shares traded on this, you got to believe institutions are ready to take this higher. And that's the idea. That's how we can see their hand. We couple volume with some other type of technical indicator or scanner. And again, I'll talk to you more about that in a minute. Here's one that just came up on the table, and it's called Open Table. That was random. I didn't plan that. Open Table has set well, first of all, it's Kersplash. Institutions are dumping the stock with great enthusiasm, with great conviction, and the stock just hit a 52-week low. Where's it going from here? Institutions seem to want to take it down. So your directional prognosis would be down, or maybe not up. And from there, you have a nice directional candidate. Okay. So how to trade volume? Couple volume with other directional tools like the new high low ranker, channel finder, close percentage change, and any number of directional scanners within Tom's Tools. We use Tom's Tools here. The concept still hold. You can find, if you have other ways to look for directional candidates, you can couple volume, find volume in other ways with other tools, but this is how we're doing it here with Tom's Tools. I'm going to just demonstrate these top two here in a minute. All right, and then what do you do with strategy? As always, if you want to go simple calls and puts, you buy a call if you're bullish, you buy a put if you're bearish. You can use debit spreads to reduce the entry cost per contract, reduce IV exposure, credit spreads, super high probabilities of profit, make money as long as the stock doesn't drop very much, or make money as long as the stock doesn't rise very much with high probability, maybe making a percentage point a day for less reward, less return, less money for higher probabilities of profit. That's something we'd like to do here. And then those of you that are advanced can consider things like butterflies, calendar spreads, and various other advanced option strategies. So let's dive in and let's play with this scanner. I think you're going to like this. All right, I was playing around this morning. I got up, I was commiserating over the Dallas Cowboys loss to the Jacksonville Jaguars. I'm still reeling 2 weeks in a row. Anyway, I don't want to get off on the Cowboys, but anyway, so I got up this morning and I was playing around with this thing. Let me just show you where the ranker is first. If you go to stock rankers and stock volume, you can detect increases or decreases in volume. We can look for absolute change, percentage change. Take the defaults here. No need to play around with these scanners. If you want to know more about what the scanner does exactly, you can click this help button here, and you can read away and figure out exactly how this scanner works. In fact, all of the scanners within Tom's Tools have a help button with a great deal of textual support underneath. So feel free to dig into any of them if you want to know more, but it's really simple. You come into the scanner, you go to take Penny Plus Weekly. These are the more liquid, usually higher price stocks. A lot of them have weekly options that expire every week, sometimes a few times a week, and grab it and then hit search. And these are going to be the highest volume stocks that as of Friday. This is Friday's data. And if you look through these picks here, you got the percent change in volume. These are huge volume spikes. This column here, you got the 30-day average, you got the latest stock volume, and then the percentage of the average that is. So the average volume for Guardian Health is what, 976,000 shares a day. And then on Friday, the latest stock volume was considerably higher than that. 1, 2, 3, 1, 2, 3. 1, 2, 3. It's what, 14 million shares exchanged hands on Friday. So that is massive. And all of these are. You can look through the stock charts and see the volume if you like. You can look at a stock chart, click the chart button if you want to see a stock chart on Guardian Health. Oh yeah, baby. I like these. I like trading these. Obviously, there was some bad news on Guardian on Friday. The stock tanked. And look at this volume. Massive, massive, massive. Now I'm starting, my energy just spiked up. I'm like, oh man, that's something I can trade. And then what I would do next is check the news. Like, what happened? Something happened. I can click news here and dig in to what actually has been happening. Guardian Health shares plunged 27% after it released disappointing cancer results. So obviously there's a drug that has not done so well. Let's go into live. Let's look at this live. So GH is the symbol. I'm going to go right here and GH it. And baby, I love these kind of stocks. And if you dig into the news, you'll see what happened. This was probably Thursday when the news came out. Guardian shares down 31% on colorectal cancer blood test study. So obviously their drug is not doing terribly well with the U.S. FDA, Federal Food and Drug Administration, and the stock has gotten taken behind the woodshed and spanked severely with a switch. So here, directional prognosis is, well, I don't know, sideways. Well, there it is. We got our first tick. Stock's trading at 30. So I can tell you the IV is going to be high. So because of that drop, and we might come in here and sell a credit spread somewhere up top. I'm going to put that on our list here as stocks to go after. So GH. Okay, so we could do one at a time like that. But, one of the great things about scanners is, we can look for other opportunities. We can take these big volume spike trades, all of them, in fact. There are 492 on Friday. So what I'll do is replace and copy all of these stocks into my stock list by hitting replace. Now I have a list of big volume stocks. These are elephant in the bathtub stocks, huge volume. Institutions are doing something with these stocks. let's figure out where they might be taking them. All right, so now that I have my highest volume stocks, then what I can do is just go through Tom scanners. I can look through any number of different scanners. There's a lot of them. We've talked about high-low scanner, right? So I could run the high-low scanner as an example, and let's look for the stocks with the lowest close for over the last 52 weeks. Which stocks? Well, the same ones I just saved, my stock list. These are the elephant in the bathtub volume stocks. And then I hit search, and this is going to find the stocks that are at the lows of their day. Look at all these here. A lot of stocks. 46 stocks on Friday set a annual low, an annual low. Riot's in there, PayPal's in there. What was that one we just did? It was GH. I've already forgotten the name. Oh, it's right here. Guardian Health. So I'll just do a search for GH and see if that's in this list. There it is. So there's GH in our list. Okay. So these are ones that have just set an annual low. Now I'll run the ranker again, duplicate, and then I'll do the same thing on the other side using the same stock list. So which of those stocks are setting annual highs? Not as many. This is, you know what? Let me just say this. Look at the number of stocks that set an annual low on Friday. I'm not even going to count this 99.81. 46 stocks on Friday set annual lows, and only what, 5 set annual highs. All right, so that could be considered, and there's a lot of different ways to forecast the market direction, but new highs and new lows is one of them. So there's a lot more new lows than new highs, and that can be considered a leading indicator. So it just sort of adds to the fuel of the downward projection when you start seeing lots of stocks setting new lows and just a handful setting new highs. All right, so we have 2 lists here. We got one list called My Stock List, and we've detected the annual lows and the annual highs. Let's look at Tao. I like this one actually. This is one I just showed you. I'd like to come in and find a trade on Tao. Why? Well, it's not a very high price stock. That doesn't matter to me. But what's really interesting is that the stock has, this is resistance at 650. And then on Friday, the stock busted through 650 on what we know to be very high volume. Let's look at Tao on a live chart. So there's lots of opportunities here for us. We're going to find one here in a minute. So look, this is the same chart I just showed you. There's our 650. It held for a few days, and then boom, pressure built, and the stock has popped aggressively above. And then today we're setting another high. That's a really nice bullish directional candidate. Okay. So let's play with the bears to start with. So I've got my stock list here. What I'll do next is just go through this. Oh, hold on a minute. Let's save these stocks in my stock list. Okay, so these again are the stocks that are setting a new low. So I'm going to save the stock setting a new low into my stock list. So now my stock list has a different number of stocks. Actually, let me refine this a little bit more. Let's not take all of them. Let's go down here and take those that have that are within, let's say 5% of an annual low. So this one here on Tandem is just about 5% higher than an annual low. I'll take that one to consider it. So let's take the top 107, and then I'll refresh the stock list with only those stocks that are setting an annual low or close to it, within 5% of an annual low. Hit replace, and then we got our bears, and from there, have fun. Single strategy, calls, puts. You could buy a put option. Find the ones that has the lowest percent to double on the puts. Let me get rid of the settings and search. This is one thing you can do. If you're a call and put trader, you can buy puts on a stock that's setting annual lows. And these are some really good looking candidates. Here's Medtronic, strong support here at 76, but certainly in a very nice downtrend, 50 sloping down, 200 sloping down. Very reasonable to buy a put on that one. This put would double with a move down in the stock of 7.73%. Good candidate. Vodafone. Remember Vodafone? I kind of just did. There's another good one. Vodafone is in a nice bearish trend, breaking through support. We know we got some volume as well. Let's look at a live chart, see what it's doing right now. Vodafone bouncing off 10. 10 will be support, but there's your volume down here as well. This stock is tanking on high volume. So you could buy a put. All right, you've seen all this before. I'm not going to buy any puts here. We could also go into vertical spreads and do exactly the same thing. The vertical spread ranker also detects a bearish cross. So if I go after put spreads against my stock list,